Hello everybody. Today we are going to start a new chapter, that is chapter number 12 according to your 11th class syllabus, and the name of the chapter is index numbers. Right? Now this is nothing like any kind of numbers or magical numbers what I am going to tell you. This is related to the index of prices. That means index numbers, they measures the relative change in prices and other related variables over a particular period of time. For example, you must have seen that prices keep on changing. Prices of goods, they keep on changing, and there are many factors responsible for the change in price. Maybe prices are changing due to change in demand, or prices are changing because there is a shortage of certain goods, or there is less of rainfall in a particular year, or maybe there are other factors responsible for it. But if somebody asks you what trend has been in the change in price, then you will not be able to indicate the trend of change in price until and unless you compare the prices of different years, right? So for telling the trend of change in price, whether the prices are changing in the you can say whether the prices are changing in the increased direction or decreased direction, or whether the prices are changing at a very fast speed or at a less rate. So all these you have to first calculate the index of change in prices. Then only you can tell whether the prices are increasing or decreasing and what is the trend or what is the rate of change in price. And this change in price we can judge with the help of index numbers, right? Suppose I say that in 2015 I have noticed that prices are changing, and I say that prices are increasing. Does it make any sense? No. Simply just giving the statement that prices are increasing does not make any sense, especially for the student of economics, because certain questions arise in your mind. That is, when we say that when the prices are increasing, when we say this, then you have to state that in relation to which year we are saying that prices are increasing, right? Prices are increasing, then on what basis you can say it is increasing? That means there is some base in your mind, and base is some previous year. In comparison to the previous year, you are saying prices are increasing. So this base is known as base year. You consider certain year as a base year and compare the prices of base year with the current year, and then say whether the prices are increasing or decreasing in comparison to the base year, right? Secondly, when we say that prices are increasing in comparison to the base year, does it mean that prices of all the commodities are increasing? No, not necessary. There are thousands of commodities what we are using, right? Or there are thousands of commodities which the economy is producing. Now if we say that prices are increasing, that does not mean that prices of each and every commodity is increasing. It may be that prices of some commodities are increasing and prices of some commodities may be decreasing also, or prices of some commodities are unaffected, they are the same. So when we say prices are increasing, then we have to take the average comparison of prices of commodities. We see the prices of commodities of certain goods which are normally used by majority of people and compare the prices of 2 years and then take out the average, and then we say that on an average prices are increasing or decreasing according to our conclusion what we get, right? And another question that is that you know that when we are measuring the prices of commodities, or when we are saying that prices of commodity is so and so, then we count the unit of the commodity. That means milk is measured in liters, wheat is measured in kg, or you can say certain other commodity that is measured in some different unit. Now, do we take the units into consideration when we are comparing the prices? No, because there are different commodities and different units for measurement for each commodity. So in that case, what we do, we don't consider the units, we just take out the percentage change, right? We measure the change in percentage and then we say that whether the prices are increasing relative to price of the base year without considering the unit of measurement, right? So in general, index number, they are the measures for judging the prices or for calculating the change in prices, right? Now, who started this concept of index number? Index numbers of prices was first developed by Professor Corley. He was an Italian statistician. He started the concept of index number. And when he developed the concept of index number, then in the beginning, this concept of index number was used only for measuring the change in prices, right? But now this concept is not only limited to the measurement of prices only, this concept is used for measurement of different type of economic variables. For example, you can say export, import, or you can say agriculture production, industrial production, right? So all these type of economic variables are measured with the help of index number. But earlier when it was started by Professor Corley or when it was developed, then initially it was used only for the measurement of prices or measurement of price changes, right? Now another characteristic here is specialized average, measuring changes in one or group of related variables with reference to time or place. So index numbers are a specialized average because we take out the average in a specialized way. So these are specialized average measuring changes in one or group of related variables with reference to time or place, right? We take one or two related variables, that means variables related to each other of with reference to time or place. That means we see the time and place, that means where, at what time. Time here does not mean this time in hours or minutes, it means time in particular year. That means time period, here we measure the changes in a particular year. So in this way, index numbers are specialized average measuring changes in one or group of related variables with reference to time or place, right? Index number measures changes in the values of variables such as price of commodities. Now these are values of variables. Example like price of commodities we measure, then industrial production, agricultural production, cost of living, etc. So earlier it was used only for measurement of prices, but now this is for different purposes. Basically, index number is an indicator. For example, price index shows change in price level of goods over a time period. So index number is basically an indicator. You can say it is like a barometer of the economy. It gives you the pulse of the economy. What is the economic trend? The pulse of the economy you can gather with the help of index number. And for example, price index, this indicates what? Change in price levels of goods over a time period, right? Similarly, cost of living index, that shows the change in cost of living of people over a particular time period. So that indicates the economic trend, right, especially with regard to a particular time period. Now, index number performs three main functions. There are three main functions of index number. First, averages out the changes in one or more variables. That means it is taking out the changes of variables in the average form. The variables or the changes takes place, and changes of different years are taken on the basis of average. So, one function of index number is it averages out the changes in one or more variables. Variables are like these are the variables. So, one or more variables measures these changes over a time period, that means particular time period is taken into consideration, current year in comparison to the base year, measures changes with reference to base year. So, it measures changes over a time period, that is current year, and measures changes with reference to base year. So, three functions it averages out. First is it averages out the changes one or more variables. This is first function. Second is measures changes over a time period and measures changes over the base year. Measures changes with reference to base year. Okay. These are three functions. Here another feature of this is index numbers are expressed in percentage of the two periods. We take out the percentage of the two periods. Two periods means current year and the base year, and the percentage is taken out. That means how much percentage increase has taken place or how much percentage decrease has taken place. So, are expressed in percentage of the two periods. Base year, period with which comparison is to be made, that is called base year. So, the period with which you are going to compare the prices, that is known as base year, and value of index for base year is taken as 100, right. So, if you are getting the calculation and doing the calculation, getting the answer as 125, so 100 is for the base year and answer if 25, that means 25% increase has taken place, right. So, this way percentage is calculated, value of index for base year is taken as 100, and whatever is the change in this, that is taken as percentage. 125 means 25% change in prices. Now, we will see the characteristics of index number. What are the main characteristics? First, expressed in terms of percentages to show the extent of relative change, but percentage sign is not used. So, index numbers are expressed in terms of percentages to show the extent of relative change. To what extent the relative change has taken place. Why do we use the term relative change? That means change in relation to the base year. So, expressed in terms of percentages to show the extent of relative change, but percentage sign is not used, right. When we say 125 is the index number, then we do not use percentage sign. When we analyze, then we say that 25% increase has taken place, but 125 will not write down in terms of percentage, right. 100 is the base year, index is 100 and 25% is the change. So, we will not write down 125%, and when we are analyzing our answer, then we write down 25% change has taken place. So, expressed in terms of percentage to show the extent of relative change, but percentage sign is not used. Clear? Second characteristic, measures net change in a variable or a group of variables. It measures the net change. That means whatever is the exact net change on the basis of the averages, that is measured with the help of index number. Third, capable of measuring changes in magnitude which are not directly measurable. What does it mean? That means some magnitude are not capable of measurement directly, right? For example, changes in business activity that cannot be measured directly, but with the help of index number we can measure the changes in business activity, whether the business is giving more profit or less profit, or higher cost or less cost. So in this way, some variables which cannot be measured directly, that can be measured with the help of index numbers. Quantitative expressions of relative changes and not qualitative. Now another characteristic is this, that with the help of index number we can measure the quantitative changes in numbers, right, and it does not give us the measurement of qualitative changes as we did in correlation. In the case of rank correlation, qualitative changes means, or you can say, it does not give the qualitative expression of beauty, honesty, intelligence, etc. So it measures only quantitative changes, or quantitative expressions are measured with the help of index numbers. So these are the basic characteristics of index number.